What's going on, everybody? Hope everybody had a great trading day today. So today I wanted to do a quick video for you guys on the Golden Goose strategy. Okay, we've been seeing this come up actually quite a couple times in the past few trading days. So I wanted to go over a couple of golden opportunities that SPY, AMD, QQQ, etc. have presented us with, so that you guys can become more familiar with the strategy. I know there's also been a lot of questions. Um, there's been some different interpretations of the strategy and different ways people have played it, and that's fine, of course, but I really want to give you guys the rundown of exactly how I'm playing it, okay? So first things first, I'm going to start off with my Fib Retracement. So I got a clean chart for you guys. All I have right here is the 9 EMA and the 21 EMA. If you don't know how to do that, you just go to your studies tool right here. Just type in move MOV AVG EXP, move AV exponential here. Okay, and then you can go in your settings right here and just change the length. I have the 9 and the 21. Okay, for reference, this 21 is gray and the 9 is teal. All right, now I'm going to go ahead into my equities here, and I'm going to take off the extended hours trading session, go into my drawing tools up top, and I'm going to hit this percent sign, which is going to give me my Fibonacci retracement tool. Okay, that's what I'm looking for. Next thing, I like to draw them on the higher time frame charts. Daily isn't necessary just because, I don't really need anything over here. The 180 day is plenty fine for me. So I'm doing the 4-hour chart, 180 days by 4 hours, right? And real simple Fibonacci's, I'm looking for where the sell-off starts as my high. I'm looking for highs where the sell-off begins down to my recent low. Okay. So right off the bat, I'll tell you that I love this level right here. And again, if you hover the candle, as I mentioned in the last video, you will see up here, it says H. It'll show you the high of that candle. So in this instance, you could see up here that it is 462.07. So I'm going to go and plot 462.07, drag that down to 385.15, which is this clear cut low. What I love about Fibonacci is really that, with key levels, sometimes, one second here. By the way, I color code these. So green means they're good to go. I'm telling you now that green is good to go already, even though I'm not going to test it on the video. I've already tested these. I've liked what I've seen. All right. And then going back to my last point about key levels, I like Fibonacci better because, key levels are great, but key levels can really be up to interpretation. And what I mean by that is if I went in on my 5-minute chart real quick, I could start picking and choosing where I see key levels, right? Oh, look at this low. Oh, look at this low. There's another one. There's another one, right? There's another. Oh, here's a high, but maybe it's the candle close of the high. Maybe it's here, and the chart just gets a little overcrowded. Where with Fibs, you really have that clear cut low. You can't really debate that 385.15 right here is the low, right? You really can't refute that. And that's why I like Fibs, because, the levels tend to be more precise and less up to interpretation of the trader. All right, now going back into my 180 to get back to the Fibs. All right, so again, we have 462.07. This is where I start. I drag it down. It's important the direction you do it in, or else if I did it in the opposite way, you will see that they won't all match up perfectly, specifically the 23.6 and the 78.6. The other ones actually will match up, but those two won't. All right, then my next high, again, before the major sell-off, right, is right here. So this high clearly starts a new downtrend. So we try to reverse and then it stops here, new downtrend. This candle high is 450.01. Okay. And I can go into my edit properties tool and I could change that to make sure the levels are precise. So 385.15 and 450.01. Okay. And then the colors, again, I like to code them in my own way. And then the last level that I have is going to be right here, 429.66. All right. Sorry about my allergies. New Jersey, man. Fucking crazy sometimes. All that pollen. 429.66, 385.15. Okay. And I'm going to make that green. All right. If you want, I'm not going to do this. Yeah, I'm not even going to mention it. It'll complicate things. I'm going to keep this simple. The last fib that you can draw in is this high right here, 479.98 down to 385.15. All right, that's obviously the high of this 180-day chart before we sold off to make that low. Okay, so I keep this one in blue just because you did have a nice pullback up to here, so that can kind of make those less effective. But whatever. Let's go into the chart now. Okay, and I turn my pre-market back on here. So where I saw a goose opportunity on SPY was yesterday. Okay, it was yesterday. Let me just take a look here real quick. See if we had any other opportunities. Okay. Okay. So in dissecting this chart, we have our fib levels ready to go. These are the same ones I used yesterday. And I just wanted to walk you through now the trade. So I'm going to go into my oval tool here, make this real clear cut for you. So a lot of people think the Golden Goose is simply a fib test, just a pullback, maybe a fib test at a 21. It's not that simple. Okay. There is 4 steps generally involved in the Golden Goose. Okay. The criteria is as follows. Step 1, identify the trend. Okay, what is the trend? I want to play into the trend. I am someone that really does not like to fade the trend. Okay, the trend, I say, is the trend is your friend. I tell myself that every day. The trend is your friend. When I fade the trend, you know, it's like stepping in front of a moving train. I get run over. Okay, so right off the bat, we have a high. And guys, just for reference, this gray stuff is all pre-market. So high right at open into a low. Okay. Then we made a new high. This high is higher than this. So we have right now higher highs. What should follow higher highs? Higher highs is a bullish pattern. That means after higher highs, for that pattern to stick, it should be followed by higher lows. We see that right here. This low is higher than this. That's bullish. That is a bullish trend. What should follow higher lows? Another new high, right? Higher highs. So we have this trend going right here of actually highs, lows into higher highs and higher lows, right? And look, it continues. Another higher low into a higher high. Okay, you could even argue that this would be the high and this would be the low, but again, it doesn't matter because this is still higher than that. This is still higher than that. Okay, so we had this perfect trend, and it almost takes me back to like elementary school, right? Where it's like we're playing patterns and it feels like Squid Games. You know, it's almost like so simple, but so complicated at the same time that a preschooler could have recognized this up, down, right? Play connect the freaking dots here. But I'm going to delete these for reference just so you could see my point of view at the time of the trade. Okay. All right. So we have higher highs and higher lows here. That's number 1. Step 1 of the Golden Goose, identify the trend. The trend is bullish, so I'm thinking about taking calls. But the Golden Goose is all about entry, right? Step number 2 for the Golden Goose, EMAs, okay? I love to have the EMAs crossed in my favor. I want the 9. If I'm thinking calls, I want the 9 over the 21. If I'm thinking puts, I want the 9 under the 21. So I want my trend to match my EMA crossover, okay? So this trend is bullish, higher highs, higher lows, right? And then right here, you will see the 9 crosses over the 21 EMA. Okay, you see it right here. Okay, the 9 comes over the 21, right? Right here it goes under, and then right back here it comes back over. So right here, I have a bullish crossover. Okay, I'm not taking a trade solely off a bullish crossover. That's not what the Golden Goose is. It's a 4-step process. Number 1, trend, higher highs, higher lows. Number 2, EMA crossover to the upside. That lines up on the same trading side as my trend. So calls for both, right? EMA crossover to the upside has me thinking calls. Higher highs and higher lows also has me thinking calls. So I'm bullish at this point. But the question is, the big question is, it's easy to say if something will go up or down, but it's hard when options come into play because you have theta, you have time decay, right? That makes it more difficult. Okay. So my big question is where can I enter? And that's where the Golden Goose comes into play. Okay. So again, I have my crossover right here. Make this like purple or something. I have this trend. Now, where can I get in? Well, for me, the obvious ad spot is boom. We go higher here. We pull back. I have an opportunity right here to get a Golden Goose. Okay, let me just delete this. Let's just be clear as day. 21 EMA crossing over a fib level. That is the Golden Goose. The fib level is a support resistance, and the EMA is also a support resistance. So not only do I have one support resistance, I have 2 supports converging at the same price level into a bullish trend. So think about that when you're taking this trade. It's higher probability, in my opinion, to succeed than just adding off of a key level, adding off a random fib, right? Because if the trend continues, you're playing into the trend, but you're not chasing into the trend. You're playing at a key level pullback at a great support, right? You have 2 supports there. And I like to compare this to a college essay or a high school essay. And I know that's going to take some of you back a little bit, but I'm sure you remember the 5-paragraph standard essay that we all had to write. And it started out with the introduction paragraph and the thesis. In the thesis, you usually had to write 3 supporting claims, 3 supporting pieces of evidence to your claim or to support your thesis, right? And then in those body paragraphs, you list out reason number 1, reason number 2, and reason number 3. Well, I compare the Golden Goose or the A+ setup to that essay or trading in general. And I say, if you don't have your 3 supporting reasons in that essay, you will fail. And the more supporting reasons or pieces you have for your argument, the better your paper is going to be. Same thing in trading. The more pieces of evidence, the more pieces of conviction I have on my side of the trade at that specific price level, the more likely I am to succeed. And when you start thinking about trades like that, I think that it's made me a lot better off, right? People will add off a VWAP, and you ask yourself, how many reasons do you have to add off a VWAP? You have 1, you have VWAP. You add at the 9 EMA. How many pieces of evidence do you have to add there? You have 1, you have the 9 EMA. Don't you think you're going to be better off if you have 2, 3, 4 reasons as to why a trade should work from your price level? And that's what's really propelled my success in the stock market over the last year and a half, especially after taking a big hit on the account a little over a year ago. I sat down and really thought about this process and my risk management and the quality setups that I was or wasn't taking. Okay. And this is what I developed, the A+ setup. And this Golden Goose is one of the main A+ setup trades that I take. Okay. All right, let's look at another example from today. Clear as day. Let me see. I believe, yes. Okay, right here. So guys, AMD, I charted out for the premium group this morning. I charted out just some simple levels. AMD, I picked it up on the scanner, and immediately you would have seen the unusual volume. What I like to see was this pre-market high right here, 98.30. I also like that it was close by this yesterday's low, which was at 98.20. So I definitely wanted to chart this down as a support and resistance. Now you'll see we had a big uptrend on AMD. Okay, we had this low is higher than this and that, right? So we're going higher, new highs, and we pulled back. Okay, my EMAs are crossed to the upside, right? And look at the perfect ad spot for AMD here. This thing ran to 103. It ran $5 from the Golden Goose ad spot right here. The 21 overlaps pre-market high. Why do you think so many buyers came in right here? Why was this such a nice candle? Well, guys, we have pre-market high, so old resistance turning into support. Okay, so you have a major key level there, and you have the 21 EMA. So going back to that thesis paper, think about it. You have people looking for ads at the 21, and you have people looking at ads on another perspective at that key level. You, if you're aware of the goose, you have both of those up, and you know that you're going to have two sets of buyers coming in there. So my likelihood of the trade working, in my opinion, is double than taking just an average trader, just solely off the 21 EMA. All right, so this is a great depiction of the power of the Golden Goose right here. And you saw it got a big quick run. If you're more of a scalper, you went from 98 to almost 101 here in what, 15 minutes. And then if you held it longer, it went all the way up to 103 too. So again, just showing you the power of the goose here. I hope this videos like this are helping out. I did want to make one more point, a frequently asked question I get about the goose. Guys, if the 21 is before the fib level, I personally wait for ads at the fib level. You obviously make your own decision, but I like the fib level better because I say key levels act as magnets. If it's a true key level, I think those have more weight than EMAs. Okay, so I like those key levels. But anyway, if you're new to the goose, definitely worth checking out my other YouTube video. I hope this one's helpful for you guys. Try to make this one quick, concise, to the point for you all. And I hope you're all doing well in this, tougher market that we're seeing. But regardless, guys, have a great day. And hopefully I will see you in the Discord tomorrow. Take care.